Grand Rising. This is Miles from Milestone Investing, and the time is 7:45 UK time in the morning. Today's date is the 9th of June 2022. We have 4 candidates that are going to go ex-dividend today in the FTSE 100. The first one on the list here is Compass Group. The second one is Sainsbury's. The third one is WPP. And the fourth one is Associated British Foods. So these are the 4 candidates in the FTSE 100 going ex-dividend. So what we have marked up on the chart is these are 50-minute charts. So from here, this is Wednesday, yesterday, 8 o'clock until 4:30 when the market opened and closed. And we can see that we have a green ceiling and a red floor, and that marks the highest and the lowest point that the prices achieved yesterday. Same is true for Sainsbury's. This green line represents the highest point on Wednesday. This red line represents the lowest point. Same for WPP, highest, lowest, and same for Associated British Foods, highest being the ceiling and lowest being the floor for each of those respective companies and their share price performance respectively. What I've done additionally, I've actually estimated where the shares should fall today now that it's going ex-dividend. And so if the market sentiment is particularly bullish, it should drop into what I call the bullish drop zone, which is marked by the purple lines, purple ceiling, purple floor. Sainsbury's is here. I'll move up a little bit. You can see purple ceiling, purple floor. So you drop down to here. For WPP, purple ceiling, purple floor. And for Associated British Foods, purple ceiling, purple floor. Okay, and also if the market is particularly, if it's bearish today, and there's a bearish sentiment in the FTSE 100 generally, then it will fall into the bearish zone, which is marked by the blue lines, the blue ceiling or the blue floor. Here, you've got a blue ceiling or a blue floor. Here, you've got a blue ceiling and a blue floor. And for Associated British Foods, you've got a blue ceiling and a blue floor. And this is where I'm estimating the share price should fall, dependent on what is the sentiment for the markets generally. And so the market will open in 12 minutes time. It's now 7:48. In 12 minutes time, the markets will open, and we should see this drop into the respective drop zones, and we can then see how it behaves and whether or not my estimated predictions are going to basically appear today and work out. So we can see. Okay, what I'm going to show you now is a market intelligence newsletter, which basically shows you what we expect for the 9th of June 2020. And we're looking at, let me just describe what I'm looking at here. So we've got 4 candidates paying these dividends in this column. So these companies collectively are paying £712 million in dividends. And that's going to be, and the qualification for that was yesterday, and they'll be basically paying that out as of today. As of today onwards, today is the ex-dividend date, so it's now too late to pick up these dividends. Yeah, yesterday was a qualification date, but they're paying out 712 million. So someone's going to pick up this money and get a check in the post for these amounts of money. Sainsbury's is paying the equivalent of 200 million. So is WPP. Associated British Foods is paying just over 100 million, and Compass is paying 167 million. Okay, that represents 1.2% dividends, 1.2% of the company's valuation. So each of these companies have these valuations listed here. This is where they're located in the FTSE 100. And so when you compare 700 million to 61 billion, it's in billions, then we've got a 1.2% dividend yield. Sainsbury's has the highest dividend yield at 4.3%, and then the others just fall into smaller numbers respectively. So this is what we can expect depending on what your criteria is. If you're a professional trader, which means you have more than £500,000 and you trade regularly, etc., then in your account, then you're going to be able to get these shares with these margins in the UK. So that means that your 4%, 2%, and less than 1% dividend yield turns into a derivative yield of these amounts. If you're a non-professional with less than £500,000 in your account, then you're going to be having to put down these deposits, these margins, and so therefore your dividend yields turns into these derivative yields. Okay, and if you are using a derivative to pick up the dividends, then you are going to receive your dividend on this date, which is today. If, however, you're just going to buy the shares, not the derivatives, but the shares, then you're going to receive your dividends on these dates, which is between 4 and 7 weeks into the future. You'll pick up a check from Sainsbury's respectively. So Sainsbury's will send you a check on the 15th of July. But WPP will send you a check on the 8th of July. Associated British Foods will send you a check on the 8th of July. And Compass will send you a check on the 28th of July. Okay, and those companies will give you that money because you own the shares and qualify for those dividends. And in this case, you're getting 6 months dividends. So that's basically how that works. However, if you're going to use a derivative, but let me go back to this. So if you pick up your money on these dates, the yields that relates to are these yields. These are dividend yields. So you're going to get this dividend multiplied by the number of shares you have. And that check will come in the post to you. So this is 9.9p. So if you've got 100 shares, you're going to get 100 times 9p, and so on and so forth. If you have 1 share only, then you get 9p check in the post. So that's how that works. However, if you use spread betting, or if you use CFDs, contract for difference, then because you only put down a deposit, you put down a small amount of money, and therefore you get a larger return. And for these margins, you'll get this return, and for these margins, you get this return. Okay. Now, I want to quickly show you something based on historical data. We looked at this over the last 10 years, and I also want to show you something very quickly. Here we go. So what we're saying that in the last 10 years for Sainsbury's, 35% of the time, the share price fell and rose back up again to the finishing line. Remember that green line I spoke about? That's the highest point of the qualification date. Well, this 35% of the time in the last 10 years, it fell and then rose back up above the highest point on the qualification date. And it did that 35% of the time in the last 10 years, in 1 week, WPP did the same, but it did 50% of the times, it did it in 1 week. Compass, 50% of the time, it did it in 1 week. And Associated British Foods, the share price fell and rose back up again in 1 week, 50% of the time in the last 10 years, 10 to 11 years. Okay, here is the number of times it fell and never rose back to date, hasn't risen back to date. And so far, there's only 2 companies where that's the case. WPP, 10% of the time. Associated British Foods, 10% of the time. Which means for Sainsbury's and for Compass Group, there is no time in the last 10 to 11 years when you didn't get your money back after, picking up those dividends, okay? In the last 3 years, this is the last 10 years, the average recovery, the recovery time, and this will last 3 years. So in the last 3 years, Sainsbury's on average for final dividends took 20 days to recover, fall and rise. WPP on average took 12 days to recover for final dividends, falling and rising. And that's what's coming up today for those two final dividends. For Compass Group and Associated British Foods, they got interim dividends. And for those ones, in the last 3 years, Compass took 13 days to fall and then rise back up again and give back your money. And Associated British Foods took 6 days on average to fall and rise again. So this data tells us that in less than a month, you can get your money back and we get those respective returns we showed you earlier. Okay. Now, if you're going to short the company because it's falling, this is a number of times as a percentage that you did well out of it. So on this is day 0, which is basically today. Day 0 is today. Ground zero is today. And so 45% of the time you did well with Sainsbury's. 25% of the time you did really well shorting it with WPP. 55% of the time you did well with Compass. 35% of the time you did well with Associated British Foods. This is day 1. This is Friday. 25% of the time. So this is now reducing, which means Sainsbury's was kind of recovering on the upside. Bounce back up on the Friday. You've got WPP. Now it's increasing. So this one was the share price was falling, it's getting worse. This went from 55 to 50% on the Friday. So that's kind of going up slightly, because less. And Associated British Foods went from 35% doing well to 50% making money on a Friday, which means this share price has kept on falling. So you can see 2 examples where this number is higher than this number, which means it's falling. 35 is bigger than 25, it's falling, continues to fall. 50 is greater than 35, it's continuing to fall. This one is smaller than this, and so is this one, which means that it's beginning to rise on the upside. So only 25% of the time are you doing well on the second day compared to the first day, because the share price begins to rise, because we're starting to recover. And the same for this one. And that's in the last 10, obviously, and this one in case 11 years. Okay, so that's basically what we can expect. So why have I shown you that? Because the share price will fall into the drop zone and then rise back up again. And on average in the last 10 plus years, we can see this is the recovery rate. So according to this data, Associated British Foods should cross the finishing line first, on average, if it follows its historic patterns. And the one that should cross the finishing line slowest should be, according to historic data, Sainsbury's on average. What's the finishing line? Let me go back and show you. The finishing line is just green ceiling, the green ceiling, the green ceiling, the green ceiling. So I'm saying to you that the share price will fall and then rise back up again. It will fall, rise back up again. It will fall, rise back up again. It will fall, rise back up again. That's what I'm saying. It's now 11 minutes to 8. So let me just say one more thing. And so effectively, you got between 20 days and a week. Let's call it 3 weeks and 1 week. So you got between 1 week and 3 weeks to pick up these returns. So less than a month, you can pick up these returns depending on your status for basically picking up those dividends. If you bought the shares, these would be your returns. Your dividend yield would be this. So every £100 you put in, you get 4.4%. But if you use a derivative, you'll get 80%. And as a professional, to qualify for these numbers, you need more than £500,000. If you don't have that and your number is smaller, then this is what you can expect. Sainsbury's in roughly 20 days will give you 20%. Compass in 6 days will give you 2%, and so on and so forth. So basically, this is what you can expect. And so now that I've explained all of that to you, we can go back to the charts and then see what happens. Okay, it is now 8 o'clock. And we can see that the candlestick has dropped into the drop zone. WPP is now in the bullish drop zone. Bullish drop zone. And this is the bearish drop zone. So it's there right now. We can see that compass. If I go down, yeah, okay, there's a big okay. This markings down here is something else. That's for previous ex-dividend dates. But the markings, what we need to pay attention to are these ones. And we can see that compass has fallen way below the drop zone, way below. Okay, it fell as low as this, and then it's bounced back up again. Okay, and it's still falling. So that one's quite, and it's rising back up again. We've got Sainsbury's, they've fallen into the drop zone. They're currently in the bullish drop zone and heading for the bearish. And then we've got Associated British Foods, that they've fallen into the bullish drop zone. So Associated British Foods are in the bullish drop zone. So is WPP. And Compass is gone way below the bearish drop zone. So this one's falling heavily. And this one is, so basically 3 out of 4 are inside the bullish drop zone, are inside the drop zones, and the bullish one specifically. Compass, the exception, has fallen way too far, and it's gone beyond the bearish drop zone, but it's now looking like it wants to bounce back. That's what's happening today. Now we're looking at a 15-minute candlestick. So it's going to take 15 minutes before this candlestick settles, and then we'll know definitely what happened in the first 15 minutes. In accordance with historical data, this will take roughly 12 days to recover, to fall and get back up here again. And this is the finishing line. I call it the finishing line. It was the highest point on that date. And why am I calling it that? Because if you bought the shares right at the highest point yesterday, it will take you roughly 12 days to get your money back and cross here. If you bought your shares down here, clearly, you're going to get your money back faster, obviously. Okay. WPP, 12-day recovery is the average in the last 3 years for final dividends. Associated British Foods, we said 6 days was the recovery for this one to fall into the drop zones and then go back up again. We said 6 days for this one. We said Sainsbury's was 20 days to fall into the drop zones, which is where it is now, and then bounce back, hit some plateau, and then start to rise back up again. We said roughly we expect 20 days, and that's what happened in the last 3 years for final dividend. And then the Compass Group, we said this one was 13 days. Yeah. Now Compass fell very, very aggressively. Now it's back into, it's going back in now into the, or it was going back into the bullish zone. Okay. So let me just do that. That's the range. Ceiling of the qualification day, floor for the qualification day. Ceiling and floor for the bullish drop zones, ceiling and floor for the bearish drop zones. And right now we're below that. So this is the only one that is fallen technically much, much further before it starts to rise. So we're expecting on average a 20-day recovery roughly for this company, a 12-day recovery for this company, 6-day recovery for this company, and Sainsbury's 20-day recovery for this company. And the returns, I said, are going to be as we showed them earlier. I hope you found that a useful thing. And what I'll do, I'll come back to these charts later on today, and I'll show you how today is sort of played out. But you can see that's how this works. Today is the 9th of June, 2022, and the time is now 6 minutes past 8 in the morning, UK time. This is Miles from Miles to Investing. Happy investing.